weekend, all. Ira Epstein with your weekend edition. And we're sitting here of your SPDR ETF stock wrap-up for this Friday. And we're now at the 9th of September, 2022. As I've said before, and I'll say it again, we have 12 days of a lot of volatility. Why 12? And it's not to do with Christmas. 12 days from now, the FOMC meeting. Do they go 50 or 75 basis points? 2 days from now, another big report, CPI report. I expect that the headline CPI number is down. Is it a half a point, a full point? I don't know. But the market is anticipating, if you looked at the stock indices today and all of these numbers, look at all this green on this board, it is saying inflation is past, the market has naturally topped it out, and that's that. Energy prices down. Do you know how many days gasoline is down in a row right now? 87 days. So your gasoline prices are slipping. You've seen it in most spots, not California. You've seen it in most spots that your prices have been creeping to the downside. Okay, I live in a terrible state where the taxes make it pretty ugly. They fall, but the taxes just eat up everything, and they got to get away from that. The state is one of the worst, probably the worst budget of all the states. But as you look at all that goes on, you got to ask yourself, okay, so the market broke from Jackson Hole, the 26, you were down 4% that week in the market as a whole. And I'm talking, I think it was the S&P. You came, then fell another 3-4%, rallied back sharply, and now you're about where you were at the close of that week. I'm giving you in round figures what the markets have done. So the markets had the big break. They've recovered some, not everything. And the question is, have they discounted, over-discounted the CPI, under-discounted it? Which way? I'm in the camp that the core CPI, which the Fed really watches, did not break big. If I'm wrong, I got to go put on my thinking hat. Why am I so wrong? But remember, core doesn't look at gasoline and food. Think of all your other numbers. Tell me the bills. Tell me the last time you had one of your bills you get every month that they reduced the cost of it. Write me on YouTube. I'd like to know which one it is. And I'm talking one that people can relate to. I don't think you have it. So that's more core CPI, the sticky CPI. Did your landlord call up and tell you that your rent's going down? If you have a mortgage, are they lowering it, or did that go up on you? So just appreciate what I'm saying. When we come to GameStop, you're going to say, wait a minute, you have Shopify on the daily. Why are you still on GameStop? Because it's a better looking chart. And I couldn't resist it just because of what it did. Here's the market. Big rally, comes down. Now look at the swoop in there. On its own, it's hard to tell what this means. It's easy if you follow when we put on our indicators. First off, the battleground had been the 100-day average in green, and in red, the 100-week average, and the 18-week average. Look at the parameter above and below. Let's put on, by the way, here's your 200-week. Let's throw on the Bollinger Bands. So the extreme to the upside was here, and you just got to the extreme to the downside. What do I teach you the pros do? When you have sideways action, they bail there, and they don't care about anything else. That's what went on at this point in time. Has there been a breakout of that sideways action since back here in April? There has not. This market has just churned away, and it's a churning stock. It's not an investment vehicle. It's a churn. It's telling you to trade opposite of trend, which I hate. It's telling you, sell into the strength, buy into the weakness. That's how you're going to do fine. Let somebody else own that. Momentum-wise, pointing still down, but getting a bit into that area where how much more momentum is there? The resistance on the way back up, 32.71. The 18-week average, to 33.92, the 100-week average. Just couldn't resist showing it. So now what we have is another interesting stock in KBE. It had an outside week up. So suddenly the bank index is looking a lot better. If this week's low was taken out in the next 2 weeks, it's a weekly chart, then I think you're going to revert right back and challenge the 200-week average. Until that occurs, who's in control? Well, certainly have higher lows, higher highs. What are the targets? Well, the first target, if it can get anything going, will be 49.88, the 100-week average, and then a retest of the upper band. That's what the bulls are hoping for. When we come to XLI, you have a market that went from the extreme of challenging a combination of the 200-week and the Bollinger Band. It started out way back here, challenging first the 100-week and that, and it fought. And then it lost the battle when it came through these lows and it found its next support level. Well, now the market is fighting right through here. It's not an outside week up. It's going to have a battle between the 18-week and the 100-week in green. That's how I'm reading the chart. I don't see anything to be done on a chart that looks that way. XLE, the energy sector. Why is this doing so much better than crude oil, which is taking a beating? And the reason is the corporations run themselves better than crude, the raw commodity. People have asked me, and I keep telling them, this is what? Active management, not passive, right? Active management. The corporations are doing a fine job of holding back. They get the pullbacks in the market. It's holding here. It's still very much a bull market until this market comes down and takes out 60, 69, and the potential is still 90, 96 if energy prices will come alive. That's the big if that's in the marketplace right now. When we take a look at SPY, outside week to the upside. Now, if I step back with you, let's go back 2 weeks on this chart and go to Jackson Hole. Well, let me do it. It's the first question. Normally it does, so I'm very surprised it won't do this for me, but it's not going to. In any case, this was it right up here where I'm pointing. All you did is come back and revisit it. You're chopping around. The market goes back into the down momentum, in my opinion, if in the next 2 weeks this low of this week is taken out. Until that occurs, the bulls have grabbed control, target potential 416.14, maybe even the upper Bollinger Band. In GLD, you're getting into dangerous territory. Each time you've gotten down into these numbers, unless you turned and embedded, you didn't accelerate like that. So you're getting into a support zone that I will assume is between 157 in GLD and 156.11. Is the market a buy? Absolutely not. On the weekly chart, it's still very much in the sell zone, but you're getting into a short covering area. That is the point. GDX, you have a fully embedded reading. So while the daily chart is showing some life to it, and I see that on it, the weekly chart is saying that's noise. You're still basically, because momentum's down there. Close the red line over 21 at the end of a week. I changed my opinion, and you'll suddenly hear me say, I think we're going to make a run to the 18-week average of closes. Not on this. I think the pros are using this rally to continue to sell. In ARC, what ARC has done, it has taken, how do I do this? Like this? I think that's it. How wide all this was, top to bottom, and it has narrowed itself in as it's lost volatility. Now, we talked down here, and the videos, I leave them up on YouTube for a long time. We talked back here because it's a weekly chart, and I said, I think that maybe it's run its course to the downside. Now what the market is doing is something different. It's in the churn area. It's now taking all this, and the congestion is showing up in the tight Bollinger Bands. Is it trending? It is not. It's in the churn at this point in time. So you get a rally that gets up near 43, then it immediately falls back to the 39 level. It's just back and forth here, and you're scratching your head. Pay attention when you see those patterns. It is not giving an indication yet which way it's going to come out. In Apple, what do I teach if you've taken my enhanced Bollinger Band course? Go to our website, iraepstein.com, go under education, take the course. I teach you that the first times you hit Bollinger Bands, the pros come out. Now, if you embed, that's different. Even though it got out there, every now and then the market will get away from you. You're not going short. You're getting out of long positions, but not in this narrow of a range. What happened here? You're looking to see, do you get a breakout? And I've told you how you figure breakouts. I'm not going to do it here. I'll do it during the daily ones. It works the same way on the weekly, but that's how you do it. But whenever you're that narrow, you got to pay attention that maybe it's not the place to be. You're trying to break out one way or the other, the way that ARK is doing right now. It's narrowing in. That's not what Apple's doing. Apple went to the lower band in the 100-day average, rallied to the upper band. That's the sucker play to buy it up there. And now the market's fallen back to neutral territory, sitting here at the 150, 159 level. I've also pointed out to you that normally on the release week, Apple stock falls. That's been the history of it. Well, you were up 1.5% this week, but you spent a lot of time also on the downside. But that's just what it does. Tesla produced one heck of a lot of cars in China. Did you see the numbers? I think it was 80,000, something like that for the month. Big numbers. I was impressed with what was going on there. And it's caught other people's attention as well. I've just seen their new car lineup. You know, they were reactivating their Cybertruck probably in 2023 or maybe 2024, that cool-looking Roadster. Started 200 grand, but the Roadster might come back. Isn't there one that Musk sent into space? Remember that? That was the original one. I saw those. They were actually pretty cool little cars. You don't see any on the road, by the way. I can't remember the last time I saw one. It has to be a dozen years ago, 10 years ago when it first came out. Higher high, lower low, just sort of meandering, not doing an awful lot. Momentum getting to a spot where it could be getting ahead of itself. Twitter, well, I'm proud to say that I told you I had throwaway money that I threw at this just because I think he's going to lose his case or he doesn't want to go to court. He'll throw up everything. And like LVMH and Tiffany, at the end of the day, there's a number that maybe Twitter will agree to. Maybe they'll lower a couple of dollars, as Tiffany did. They lowered their stock and deals get done. That's how it works. Does he really not want the company? Well, then you got a legal battle, and he'll have to decide in court what he does, or he can throw $1 billion away and still walk away and eat all his legal fees. I think there is a breakup that he's agreed to on a number. So that's his call. I still think at the end of the day, he wants this company. That's my own thing. So do I think the pros have been buying these breaks? I've said it to you. Does it make sense on a chart? No. No. It's what I call throwaway money. It's not going to go to zero. The company's going to be fine. But it could go back to $30 if he doesn't do anything. That's in my head, the numbers I have. TLT, probably time to say goodbye to this position. And I'm a bear. I've told my clients I'm bearish. Those that followed it have done okay. And this was not a good trading week for me. This was a week on this rally I gave back on recommendations money or lost, but a combination of the two. It happens. The guy that tells you every week I made money, they're a liar. They're the guys that post on my website. I look at all the postings, not on my website, on my YouTube channel. I made $62,000 this week with Jane Doe. She is just phenomenal. It's every week a money machine. Well, you know what that's about, crypto trading. Do you believe it? If you're responding to that and following it, shame on you. I take them off as fast as I see them. I report them. And Facebook, YouTube, none of them do a damn thing about them. It's out and out lies. You know that. I know that. If a guy can make $62,000 a week or a month, why is he telling you about it? He's the quietest guy in the world. He's compounded it in the first, if it's a week, just to give you an example, he's got 240,000. So he's got 3 million at the end of the first year, but let's keep compounding it. He's the richest man in the world. Okay. So in looking at the market, you see what's going on here. Probably in front of CPI, probably time to just lift some positions here. Take as little exposure as you can into that event, is my opinion. That's, by the way, the news that I get, and that's how our charting, that's the beauty of it. We post there. I get other news services, so they all come in. Dow Jones News comes in it. You can get Reuters. You can get all the services you want, and they're coming at you all day. You can get buried in news. I do. So What should you do? Well, one of the things I'd love you to consider is starting with me first thing in the morning. And what do I mean by that? First thing in the morning, I put out a morning futures video, and then I also put out an SPDR ETF video. How do you work with that? It's pretty darn simple. You go to our website under free offers. Now, what else do we have? And all you got to do, by the way, at any point is just go to www.iraepstein.com. But what about you see me talking about all these Bollinger Bands? Do you know how to work with them? Take a look at this video right after this. We've attached it. And learn. It's so simple. It's 13 chapters. It's not going to take a lot of your time. It's going to stick with you for a very long period of time. And you get your SPDR ETF for free, the morning futures for free for 2 weeks, both of them. Come on. I'm paying almost for it, plus the charting software. You're going to learn a lot in a short period of time. And when you buy it, you decide when the course starts. It's that simple enough. You hit a button, you activate it, and away we go. You just let us know by hitting that button. We start it. That's when your research with me will start too. I'm Ira Epstein. You have yourselves a great weekend. I will see you all come Monday. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.